Hey Stars, Phil C here with you, professional trader, owner of Star Prosper, to achieve success. You can do it. I believe in you. Today we are getting right into it, talking about why you are already profitable and why it's not consistent. Also, taking a look at the charts for a weekly overview. If you want to know why you are already profitable, but not consistent, then keep watching the episode and we'll hit on it throughout the entire session together. Before we get into it, quick update on Aussie dollar, as the STO trade last week didn't work out for us. But in the live room, Aussie dollar hit target 2 on a swing trade we were involved with for over 300 pips. $600 from one trade isn't too bad, especially for those on the 14-day trial. Now, I don't win all the time. Sometimes I'm often wrong on these moves. And for those who were following me in the Star Live trading room, see all of that. We smacked back the Aussie dollar, but yeah, I don't win all the time. Shocking. I prefer to show all win trades and all loss trades. I'm here showing up every week, not to impress you, but to bless you and do the best that I possibly can to provide value and help you, advance you towards where you deserve to be and who you want to be. I'm not an 80% winning trader with 100% returns per week, because anyone can manufacture that kind of nonsense and post up that shit online. And my personal opinion with that is it's very disrespectful, with their intent of creating an illusion for other people to think that that's achievable by buying into their system and what they are doing. The only reason they are saying that and showing that nonsense is to make $50 per month from everyone who believes in the false narrative in hopes of quick profits. And they prey on people. That's their promise, quick profits for you, for everyone they pull in. I find it incredibly disrespectful towards me and towards everyone else. From working with many traders over many years, I've noticed a lot seem to gloss over a very simple concept. And when you hear this, and when you understand this, it makes trading incredibly easier to pick up. And I want to share this to inspire you with your trading right now, especially for those who think that 50% accuracy isn't great, if that's what your strike rate is too. I want you to understand this. This is how close you are to being consistently profitable. And I say close to because if you are 50% accurate with the risk reward I'll demonstrate in today's episode, then there's only a small tweak with what you are doing in your trading. That can be done with our STAR method that will turn it all on for you. I can't get into the full proprietary method right now, but if I get enough interest in the comments below, I'll put a video together for you. But understand this, if you are 50% accurate and you trade 2 targets, and target 1 is over 1-to-1 and target 2 is over 1.5-to-1, then you are already a profitable trader. The one thing that holds traders back from being consistently profitable is knowing when you are active in the markets. And that's achieved by what time frames am I trading on and what session times am I trading. Again, when you are active in the markets. Do you know that if it gives you a positive expectancy or not? And what I'm sharing right now is the only reason 90% of traders fall off a cliff with their trading. I spoke to a trader last night, Andre. This guy's a beautiful soul. We talked for about 2 hours, I believe it was. And the main point that we got to was exactly what I'm sharing here right now. He's already profitable. He has some consistency. But we need to get the numbers together and treat it as a business. So he's signed on and we're working together on that. We're finding out when and where Andre's strategy works for him. See, once you know that, this is what I want you to do. Once you know that, you show up every day and you trade it over and over until you hit new equity highs in your trading, because you're doing the same action every single day that produces the same outcome. Remember that. So he will, with absolute certainty, be a consistently profitable trader. That tweak that turns it all on. That's the edge that we are looking for. Exactly why my business exists and exactly why we do the method we use. So shout out for him for taking the time to talk with me. It was wonderful and to connect with you, and I appreciate your kind words towards me, especially towards on what we are building here. That truly means a lot to me. I'm grateful for that and forever cherish that kind of support. So thank you very much for that. With that said, please help me too by liking the video for me and subscribing. That also would mean the world to me to support me in helping others advance them towards where they deserve to be. And I wholeheartedly appreciate you always. All right, let's get to the charts. Let's get it through the session and let's see what we can find. All right, good. Recap what's happened thus far. So we'll do that quickly. Yeah, because everyone wants to see losing trades. So let's go over those. And yeah, well, before I skip the euro dollar, we just will go over this. A simple break of structure here towards the upside. So expect a pullback at some point here. Price action moves towards the upside. We break and close above, looking left. So we expect a pullback here. Not really paying any attention to anything else with this. So with the pattern in front of us, that is now invalid. My little bias towards the downside didn't play out. Price action moves higher, break towards the upside there. And yeah, we just wait for euro dollar to do its thing now. All right, everyone wants to see this one. Everyone wants to see this one. How wrong I was on this move. Okay. At least we got the trend moves towards the downside. At least these are playing out. That is something. We had a cipher pattern that we were watching on euro yen, and this one slapped me hard on this this trade right here. So it's a losing trade. We're expecting price action to change direction now and head down to our previous structure. So that's what we're waiting for. This one is no good. Losing trade here. However, we did come back. We bounced back on a couple of other trades. So over on the daily euro yen, once again, a little double top up here, right? We come down. We have a short little pullback here. Now we might get a move towards and retest the highs here, or we fall short of that, and then we might get a move all the way down into structure right down here. So previous resistance becomes new support on euro yen. The pound dollar. Again, quickly recap these because I have some things to go over. Pound dollar looks like a loss on the daily, however, it is not. So if we jump down to the 4-hour time frame, you can see that we were looking at the pattern trade on the open. I covered this last week, right? This was a sell at market. That was in last week's episode, right? So we sold on market open, and immediately we get a drop there, right? There's a little gap in there, but we immediately get a drop right down into target one. Okay, so that's good. Good little trade there. So 75 pips. Well, yeah, 70 pips on this one. Now, as price action comes down and hits target one, what do we do? For those of you who will follow me in the live room every single day, what do? We trade two contracts, right? So if price action comes down and hits target here, we take off half of the position. We roll stops to break even, like this, and then we look for that move towards target 2. Did we get there on this one? No. Price action reverses immediately after it hits our target 1 and stops us out for break even. So we don't get an opportunity for target 2 on that trade. However, that is a winning trade. We will take those right there, maintaining our 50% win rate. Then we've got a got a massive pop towards the upside here again. So expecting a correction, a pullback at some point back down into this level right here. Again, nothing else going on. Now, what I want to cover actually is the dollar CAD. This is what I really want to go over. I'll come back to this one because I'll come back to dollar CAD so I look less like an idiot on Aussie dollar, right? Aussie dollar. Remember this. Aussie dollar right here. Okay. Aussie dollar is the STO trade that got me knocked out. However, I was long in the live trading room and we hit target 2s. Yeah, so that's really good. At this high right here, right there, everyone in the live room following along on the Aussie dollar, we hit target 2. So STO, I look like an idiot. Live trading room, look like a genius. Half right, 50%. Yeah, that's the key. That's the narrative of today's episode. But target 2 was good. We had 300 pips. Was a nice swing trade move for us. Now it's just playing around at a decision point here and not too much else to pay attention to. So that was a pretty decent trade in the live room compared to our STO trade right here. Let's clean up the analysis. And again, we're at a decision point. We'll wait and see what happens with that throughout our live trading session. Aussie yen. Okay, so big move here. Look like a genius yet again. We'll go this so it's easy to see, right? So it's recapping this actually with the shorts throughout the entire week. This one, Aussie yen, big move. Yeah, so we'll take those winners, right? Big winners here. 389 pips or so for target 1 on this pattern trade. This one suited the narrative last week of pulling in profits with patterns. So yeah, it was great to see that this one played out and it was a big move. Keeping in line with our rules that we keep covering with trading 2 targets. Now that price action did come down and hit target 1, we're looking for that extended move right here down into target 2. If we do get down there, that is a monster move. We're looking at about 600 pips on that. It'd be about $1,200. Yeah, that's not bad. 1,200 on target 2 would be really nice. We take off half of our contract here as price action comes down and hits target 1. So we do that, right? Then we immediately roll stops to break even. Because again, as you just previously saw, if we get price action moving back towards the upside, we want to get out of the position. Then we walk away with a winning trade. Profits in your pocket, we will take those. So pretty decent move on that one right there. Also roll that as well. Kiwi yen, actually, I was, not this one. That's an old one. Kiwi, that's an old trend continuation trade. Example, actually. Kiwi yen on the daily. I was long on Kiwi yen on a 4-hour time frame in the live room, and it didn't play out for me. Right? This one did not work out in my favor. I was long at this structure level, right? My stops were below the swing low, right here looking left. Price action came down. I got long, so I bought the market. Here we are, in anticipation that we bounce from this level and head towards the upside. Now we do, however, before it decided, we came all the way down and knocked us out for a loss there. And then immediately from there, price action moves towards the upside. Now that does happen. There's nothing you can do about it. That's why it's important to always trade your plan no matter what and not worry about those things. You accept this as the cost of doing business, because trading is your business, right? You don't worry about stop hunters. You don't worry about brokers looking at you, watching your account and every single trade that you're doing. You don't concentrate on that at all. Because once you do, you're going to second guess yourself and then emotionally react. Then when you get emotionally unstable with it, that dictates the next time that you're going to execute your trades. We don't want that. We don't want to skew our results, right? If we know that our strategy has an edge, then all we need to do is come in every single day and trade that no matter what. Don't worry about these sorts of things. It's the cost of doing business in trading, right? You're not going to win all the time. But where does the consistency come into play? Right? So we'll get to that on dollar CAD, as I've been meaning to get to. Yeah, so right now, there's nothing else that I want to pay attention to with anything in my portfolio. So we'll head on over to dollar CAD. Actually, there is a potential opportunity, I just remembered, in Kiwi Yen. It is a Gartley pattern, but we will get to that in a second. First of all, cover the dollar CAD example, and then we'll finish up on the Kiwi Yen, giving you a profitable trade to look at throughout next week. So look what happened over on the dollar CAD, right? Here we go. So we had movement, sideways movement here, yes? So price action bouncing around, consolidating here, and then finally, price action moves towards the downside, okay? Right there, we retest this low, and then we get a pullback like this, and then finally we get a candle that closes below that low right there, indicating to us that price action intends to move to the downside. Okay, so price action moves down, retesting this structure level right here, and then we get a move back, a complex pullback like this. Get a move back up here, right? I was looking to get short on this trade with the pattern opportunity. The pattern opportunity that I covered for entries, we didn't quite get there, right? We just fell short of the Fibonacci retracement from this swing high. Okay, this was my shelf that I was looking at. Swing high to swing low. Now we did come up and hit the 786, right? That's all well and good. But our entries right here were at the 886 because I was using a bat pattern trade for our trend, for the entry for our trend continuation trade towards the downside here. Now we do get a move because the thesis was correct. We do get a move towards the downside. Unfortunately, it didn't quite get my entry. But let's look at the trend continuation trade example here, okay? Let's talk about you and I being 50% accurate on this. Now, if we get a move down, right? Put this down here. If we get a move down, breaking and closing below, giving us a new structure low, then what we're looking for with a trend continuation trade is a pullback back up into look left structure, right? Back up into previous resistance, previous support, excuse me, becomes new resistance, right? So if price action moves all the way up into this level, we're looking at a short, okay? So you would short it right here. If price action comes up into previous structure, then you would short, because that is a valid trend continuation trade, right? We have a complex pullback back up into this level, stops above the swing high right here, okay? Stops above the swing high, entry points right here, and targets are at a retest of the lows, right? So that's target one on a trend continuation trade. Notice the risk to reward profile. We're over 1-to-1, right? So that's target one. Yes, price action's already come down and hit target one. Now it's going to prove my point in a second. This just happens to be a winning trade. But it is a good example for being 50% accurate and having a good risk to reward profile. This is what I want you to pay attention to, right? So if we have just over a 1-to-1 for target one, now let's do our target two. Fibonacci extension right there. Target two is all the way down at a 127. Notice the risk to reward profile on target two. We have over 2-to-1, right? So here's the thing, guys. Here's what I want you to pay attention to. Here's what I want you to understand. Think of trading in terms of a coin flip, right? Heads and tails. Yeah? Heads you win, tails you lose. But every time it lands on heads, excuse me, every time it lands on heads, you get over 1-to-1 and 2-to-1, right? But every time it lands on tails, you get taken out for your stop, right? So this is your risk to reward profile. Now you're 50% accurate. So it's a coin flip, right? Every time you put a trade on. Every time you put a trade on, and you're 50% accurate, and it lands on heads, over a period of time, you have a mathematical proven probability that you win more than you lose. Do you understand this? What I'm explaining to you now is what's known as a positive expectancy. Okay? It's a mathematical proven probability that you're going to gain more than you lose. In other words, it's a winning system. Now, here's the trick to it, right? Here's the trick to it. What you need to do is find out that what you are currently trading right now actually produces that. Because if it doesn't, I can guarantee you that you will never ever be consistently profitable. Now, you'll have some profits and you'll have some losses, but you will never be consistently profitable. That's the secret, is knowing when you are active in the markets. When are you in front of the charts? That is what you need to test on the strategy that you are trading, because you need to know your numbers. So if I'm trading London live market in the morning for 2 hours, right? That's what I need to test. So if I'm trading my strategies for 1 to 2 hours every London market open, I need to know if I have a PE above 0. If my strategy that I'm trading right here, the trend continuation trade, I need to know, does it produce me a positive expectancy? Does it give me a positive expectancy? Excuse me. Tripping over my words. Because without knowing that, then you are gambling. We don't want to do that, do we? We want to treat trading as a business. We want to run trading as a business. You don't want to throw money into the markets not knowing that what you were trading actually works. You need to know your numbers. You need to know that your strategy in the times you're trading, when you're active, gives you an edge. If anything, that's the takeaway from today's session. Because if you don't do that, this is not going to work for you, period. You need to know that what you were executing, what you were trading, actually gives you that edge. So that's what I wanted to show you today. This was just a really good example of that trend continuation trade. You're about 45 to 50% accurate, and you have a very good risk to reward profile. If you've tested that on the times you're active in the markets and it gives you an edge, all you need to do is show up every single day and trade that plan. And you'll become consistently profitable. You will go from being a profitable trader to actually being consistently profitable. That's the tweak right there. That's what I want you to focus on. Now, without this being any longer than it needs to be, I did promise leave you with a trade opportunity. The trade opportunity will jump back to the Kiwi yen because we're going to take a look at a potential Gartley pattern. We've got a Kiwi yen 4-hour time frame potential cipher potential Gartley pattern if we can get a move towards the downside here. Okay. So could be a potential AB equals CD move right here. We get a pullback. I'm looking for a move all the way back down into this structure level right here. If price action can move towards the downside, then I'm looking to buy it up. All I'm doing is looking for a short pop out of the market. And we're going to use a Gartley pattern, potential Gartley pattern, in order to do that. So I'm going to take our lows right down here. Okay, there is my lows all the way up into the highs. And then we have a pullback right there. The criteria 1 is condition 1, Fibonacci swing low to swing high. Okay, price action did come down and give us a B point retracement at the 618, right? Number 2 is we want a Fibonacci retracement and go from our swing high up here all the way down to our swing low. And what we would be looking for is price action to move all the way up into the 618. And we do. So we get a 618 B point, and now we have a 618 C point. The last thing is the AB equals CD move all the way back down into this level. So it'd be about 85s, right? So that right down here at the psychological number. Condition 3. We're looking for that move towards the downside. So we'll grab a Fibonacci extension tool and go from swing high all the way down to swing low, back up in like this. Okay. And we're looking for that move all the way down into the 127 right there. So it's a little bit off. We're looking at 85s to 50s for our buy right there. If we do get that M formation, that would give us a valid Gartley pattern. Look like this. X to A to B right here, B to C, and C to D all the way down into the 127 right there. Okay, so that's the potential Gartley pattern. Kiwi yen 4-hour time frame. If price action can move all the way down, then we're looking for a buy opportunity. If we get a move towards the upside, well, then makes the pattern invalid. Then we be patient and wait for the next opportunity. Entry levels are at the 127. So if we grab the dealer thing, then we drop in our buy right there at the 127. We have our entries. Okay, stop placement, already good, below our X point looking left. That's what we need for pattern trades. And then targets, right? Where are we getting out if we're right on this trade? Grab a Fibonacci retracement tool for the Gartley pattern, and we'll go from our swing high up here. So this is our A point, all the way down to our 127, okay? Assuming that this is where price action turns. So if price action can move all the way down into here, we're looking to buy it up into the 382 right here. Okay. Again, the risk to reward profile is really good on this trade. We're over 1-to-1 for target 1. That's good. Gartley pattern is half right. That's all you need to be. Half right. If price action comes down, you buy it up. It's the coin flip, right? We're over 1-to-1 to target 1. That means you're profitable over time. Remember, that's target 1. Now target 2, we copy and paste that. So duplicate this, move it over. And then target 2, we're looking at a 618. Okay, so we'll drag that all the way up into the 618 right there. So now you have the potential Gartley pattern. You have your entries, stops, and targets. Entries at the 127, stops below our X point looking left, and target 1 at a 382, and target 2 at a 618. All right. I hope this one was valuable for you. Now, if you want to join me in the Star Live trading room, I'll leave a link to that below. It's a 14-day free trial, doesn't cost anything. Grab my material, trade live with me, and remember that once you sign up, you get immediate access to all my training material that made me a consistently profitable trader. And you get access to myself, so you and I can work together on any questions that you may have to help you advance you towards your goals so you can become a consistently profitable trader too. See you in the live room, and if not, I will see you next week. Until next time, be safe, enjoy life, always. Thanks so much.